right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to get started with our analysis, and we're going to use the bias chart as we do every day. Let's go ahead and make that a little bigger, and we're going to start with the euro first and foremost. So let's go over to the euro dollar here. Okay, sorry, I just was typing to somebody. Okay, so let's go over to the euro dollar, and here's the euro. So, what do we do here? So, yesterday we had talked about the completion of our AB equals CD. Okay, so I was warning you guys yesterday, and you guys probably remember the tweet with the dollar flag pattern. You remember the conversation we had yesterday about AB equals CD. You know, we talked about why we completed this pattern. You know, that we talked about several days ago, why that we would complete this pattern, because it was a shallow retracement. We were less than 38% retracement, which allowed for us to complete it, and we did yesterday. So, you know, if you were listening in yesterday, you were not, hopefully, you were not aggressively short the dollar or along the dollar short the euro, because you knew it was going to bounce, and it did. Now, the fact of the matter is the euro dollar has just not bounced a whole lot, and you know, the price action that you see right now is very similar. And let me be clear here. The price action is very similar to this price action, and this is us currently. So if you're expecting a huge bounce in the euro dollar, at this point in time, it doesn't look like it's going to happen. Now, that's not saying that we can't get a little bit more of a bounce. I mean, I'm hoping, just like I did yesterday, and I drew this out, I'm going to draw the same damn thing today. If we get a bounce, I would be looking to sell some sort of bounce up towards 1250. Now, we can also draw this, which will bring in a little bit more clarity to what we're trying to do. And you can see that maybe just perhaps, and let me get rid of this one, maybe just perhaps if we get a rally back up towards this 112.60 or 55, which we were talking about yesterday, that gives us a little bit more reason and confidence to actually get on the short side up there. All right. So again, today, same analysis as yesterday, that if we rally to 112.55, that would be a good opportunity, in my opinion, from a risk-reward standpoint, to be on the short side of the euro. Now, if we break above there, that's going to be a different issue. You know, if we break above, then, you know, we're going to probably start seeing the euro dollar squeeze, and we're going to start seeing some dollar liquidation after a couple weeks of a nice rally. All right. Frankly, I don't expect that to happen today. We don't have, you know, other than some housing data coming out, which is secondary, really. I don't have any real reason to believe that the dollar is going to sell off like that. Okay, it could, but you know, I don't see anything ahead of us today that suggests that that's going to happen. All right, now the risk is that we don't even do that. The risk at this point in time is that we start the sell-off, because, you know, there's not the problem that the dollar has is everybody wants in the move right now, and there's not a lot of people on the boat. You know, I've been using the analogy of the boat the last couple of weeks. You know, when the dollar created the hammer, you know, the hammer 2 weeks ago, everybody was trying to get back on the dollar boat. The boat was leaving the slip. No one was on the ship, and it just took off. All right. Now the problem is that you got a very the positioning in the dollar is probably much greater now, and we'll find out today with the CFTC data. It's probably much better now than it was, the last couple of weeks. But really, the last couple of weeks is giving us a suggestion, or suggested to us, that there were as many dollar longs down here as there were down here. And you can see what happened, when the Fed started raising rates, and the expectations the Fed's going to start raising rates, and the ECB was going to the divergent monetary policy. So right now, the dollar's starting to ramp up again. And what if the Fed actually does raise rates in June? Well, yeah, we're going to be up here at 100, probably, without much of an issue. Now you're getting dollar longs trying to get back onto the ship as it's leaving, and that's the problem. And that's why I'm skeptical that the euro is going to be able to scale much more than 112.50, because there's people like myself and you that are sitting here looking at the euro dollar going, dude, I just want to short it. If I could just get any kind of rally, because I'm not on the ship. I mean, maybe I have one foot on with the dollar Canadian, but I'm not fully loaded on the boat with the dollar. So the risk is right now that the dollar is holding on to this 50% retracement currently. It's trying, but we're sitting below 112, 112.20, which was well, 112.10. We're like sitting there right now. The risk is, we just start breaking into new lows, and if we break through, 111.80, which is not very far away, guys, it's only 30 pips away. We break through 111.80, we're going to trade down to 111.25 today without much of an issue. So 111.25, which is major support. 111.80. Ah, crap. Here, let me get rid of the asterisk. We can't use the asterisk today. Okay, so we're in a bearish trend, as you guys know. All right. And again, if we break through 111.80, the next target that we have is 111.25. Nick asked if I could draw a boat. Can we draw the boat again? I can't draw the boat again. We don't have enough time today. Maybe later this afternoon, as we're bored, on the lunch money webinar, about 5-6 hours from now, I'll draw the boat for you. All right, we'll do a little bit more kindergarten drawing for you. All right, so here is the pound. Eric in our chat room, we also known as E, he asked if the pound has a head and shoulder pattern here on the hourlies. Well, the thing is, we might, and this isn't the greatest head and shoulder pattern. And I was talking to Nigel the other day, and I'm like, if you have to tilt your head a little bit when you're looking at a chart pattern and saying, yeah, it might be, probably isn't. But if you remember our analysis yesterday, we talked about the importance of 145.50, right? Matter of fact, yesterday on our bias chart, we put 145.50. Well, guess what? We're there right now. So if we break 145.50, we might see a little bit of a sell-off here. So 145.50, we break it. 145 is not going to be on. It's going to be very possible, is what I'm trying to say. Okay. I don't want to write just 45.50 because we're sitting on it basically. But if the dollar starts to gain some steam, we could trade down to 145 pretty easily. Okay. Now, as I said yesterday, any rally back up towards this 146.75 level would be a great selling opportunity. Now, if you don't know why that high is so significant, you have to go back to February of this year. That high was significant, and we've been able to really give us a key close above that. So 146.75. I don't know where. Sometimes my dyslexia sets in, so it's 146.75 is resistance, and that continues to be resistance. Okay, 146.75. And guys, we can get up there today. I know you go, oh, God, it's so far away, Blake. How are we going to get up 125 pips today? We can. Very easily. Very easily. Do you know why? Because these stupid polls get released, and when these stupid polls get released, it like, you know, it makes the pair herky jerky, so we can end up, you know, going all over the place. So just don't don't think that we can't. All right, don't think that we can't. All right, now why is the euro spiking up right now? When I see a 6 pip move, I start to think that we're spiking. That just shows you how little volatility we've had today with the euro. Why? I don't know. Why? Why is the sky blue? Why is water wet? I'm not too sure. But anyway, so it's just a little ramp up in the euro. Not too sure why. Okay, let's go over to the Swissy. So here's the Swissy. All right, the Swissy has been freaking strong. You know, this is probably, and as I explained to you the last several days, this is probably one of the most irritating things to me right now, is the relentless strength of the dollar Swiss. Because as I've told you guys for the last several months, my favorite trade is being long the dollar Swiss, because when the Swiss franc, when the Swiss National Bank is keeping rates at negative 3.75 basis point, and you got the Federal Reserve that's raising rates. Yeah, this is BS. You know, you got this. You know this is a good long, and the crazy thing is even when stocks have been weak, the dollar Swiss has been strong. So I'll tell you, this has been beyond irritating for me that I'm not long the dollar Swiss. Can't even get dips. I mean, that's the crappiest thing, is we can't even get dips. You know, it's like, all right, well, if I can just get a dip, you know, at this point, if we can just get a dip down to here, should be 96. Let's really remove that. Like I said, it's like I know this is I've known this is the best long out there, and why I'm not long just still boggles my mind. And it's, you know, I was more fearful that the stock market was going to sell off and the Swiss franc would come into favor. You know, I technically I knew it was the right thing to do. Fundamentally, I knew it was the right thing to do, and I just didn't pull the trigger. So anyway, regardless, 98.60 would be support today for the Swissy. 98.60, and resistance, frankly, is parity. Parity is 161% extension. It's also parity. You know, so being 161% extension just above it, I mean, that's just the next resistance level. It's just a big round number. Okay, it is bullish. Okay, let's go look at the dollar yen. Now, this is another one that kills me, because the dollar yen, as I've been saying the last couple of weeks, first and foremost, as far as the dollar yen goes, we met our head and shoulder completion finally. We hit the breakout point from the end of 2013, and we basically went within 8 pips of that breakout point. We bounced, and I said, oh, okay, great. I'm going to start looking for reasons to buy, or places to buy the dollar yen. You know, I wasn't quite there, but you know what's the most interesting thing about that's happened with the dollar yen, which obviously most of you know this, but I'm going to reiterate. The most interesting thing about the dollar yen is even when the stock market has been under pressure, the dollar yen has been moving higher. What that suggests to me is that the yen is losing some of its safe haven bid. Now, that's something that we haven't seen in a long time. And to me, the thing that makes it so um, the thing that makes it so interesting is that I'm so bearish the Japanese economy. I really am. I'm so super bearish the Japanese economy, and I think the yen is a short. But I've been playing it to the long side for the last, for the last several months, since we've been, up, in the high 120s or the mid 120s. But I've been looking for reasons to buy the dollar yen, and now look at what we're doing. We're right up against resistance. Now, I've had a couple questions this week about, hey Blake, is it time to short the dollar yen? And I'm like, nah, no, I'm not, not comfortable with it. Yeah, no, I don't think so. It's just not acting right. Price action looks bullish. That's been our conversation pretty much all week. Everybody keeps asking me, hey Blake, I'm going to short the dollar yen. And I'm just like, yeah, I don't know. Listen, we're right up against resistance right now. This is channel resistance. Okay, 786 retracement, we're there. Look, if you want to short the dollar yen, right now is the time to do it. I'm not going to do it. I'm going to tell you right now, I'm not going to short the dollar yen. However, if you guys are looking for a trade, your risk is manageable here if you want to try to play it back into this channel. All right? If you're going to try to play it back into that channel, right now is the time to do it. Like I said, I'm not comfortable shorting the dollar yen, but if you're going to do it, this is it. I really think that 110.50-ish is really key resistance. If we get a foothold above that, I have to start buying the dollar yen on dips. I have to, okay? We're in a range. We're threatening to turn bullish. And if the dollar yen goes bullish, that's very dollar bullish, because the dollar yen, this move in the dollar yen has really took down the dollar. It took down the dollar index. If we start really ripping through here, it's going to put a fire under the dollar's butt. Okay? All right. So again, look, if you guys want to short the dollar yen, this is the time to do it from a risk reward standpoint. I'm not going to take the trade. That's not what I feel like doing, but I'm just giving you guys some things to think about. And if we break above 110.50, we get a good foothold above there, I wouldn't want to be on the short side of this. Okay? All right. Now, support. It's right there. So any dip down to 109.70 is probably going to be looked as a buying opportunity for a lot of traders. Okay, that's going to be support. Let's take a look at the Canadian. So as I explained to you guys moments ago, I'm long the dollar Canadian, and I've got a full-size position. Actually, I've got a bigger than full-size position. I've been buying it since down here. I think that crude oil has peaked near term. That's why I'm getting long the dollar Canadian. All right, my cost average right now is at 130.15. Somebody brought this chart to my attention yesterday. Said, "Hey Blake, is that a butterfly pattern?" I'm like, "Yes, it's a butterfly pattern." And you know what? It stopped the dollar Canadian pretty much in its tracks. Stop the dollar Canadian right in its tracks. 161% extension, 261% extension. That was what, a 618 right there. That's a butterfly. Pretty butterfly too. You know what's really interesting about that butterfly pattern? I expected at least a 38% retracement. We've had a 24% retracement. So let me ask you this question. If we get only a 24% retracement in the dollar Canadian, is that bullish or bearish? Again, I'm asking you a question. If we only get a 24% retracement, is that bullish or bearish? That is way mother freaking bullish. All right? Extremely freaking bullish. When you have a shallowed retracement of only 24%, that means that buyers are not willing to give up. Okay? When you have a move like this and you don't even retrace 38%, man, that's bullish. If we break new highs, well, I guess my 2 cents would be we're probably going to get to this inverted head and shoulder pattern target quicker than I thought. Like, I think it's going to take us a couple weeks to get up here to the 136 level. But if we only see a 24% retracement and we close the day above like 132, we're probably going to see 136 maybe in a week. Okay. Remember, this is a big inverted head and shoulder pattern here. So, and you know, that a lot of that's predicated on today's data. Don't get too excited about anything that you see here. Not ahead of the retail sales and the CPI. Okay. But in a half an hour's time, if we start breaking out because of the data, the Canadian data is too weak, because market's already expecting some weak data anyway. But if we break above there, yeah, you got to be careful. You got to be very, very careful. Okay. All right. So support. I think support. If you get any dip right now, any dip to 130.35, you have to use that as an opportunity. Okay. Obviously, 131.55 is going to be resistance. Okay, so 130.35. That's key support. I am adding down there, just to let you all know. And I always pride myself that I like to do things. I like to tell you what I'm doing before I do them, as long as given the opportunity, obviously. So yeah, if we can get a dip down to 130.35, I'm gonna be a buyer. Okay, we've turned bullish after we broke out of that resistance of the inverted head and shoulder pattern resistance. All right, I'll be back in a few moments. When I come back, we're going to do the Kiwi, the Aussie dollar index, Peso, Swedish Krona, Norwegian Krona. Don't go anywhere. Thanks for being here, TGIF. Bye-bye. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we are kind of halfway through our analysis, and we're gonna go ahead and hit up the Kiwi and the Aussie. So let's start with the Kiwi. So the Kiwi dollar, the Kiwi dollar has been frustratingly strong. I'm really surprised how strong this stupid thing has been. We are just trying to, move out of this damn pennant, and we've failed to break really the 67.15 level. I mean, we tried, push some stops below those lows, pop right back up towards highs. I mean, you can see we're just, testing the underside of this trend line. So very, very frustrating move. I'm actually very thankful right now. I'm not trading the Kiwi, other than being long the Aussie New Zealand. I'm not trading like the Kiwi dollar at this point. It's very, very frustrating. Looks like the 50% is holding, which is 67.75. Support, being 67.15 still. Realistically, this is probably not a bad place to be on the short side. I think I'm going to sell a little Kiwi right now. I sold a little bit of Kiwi dollar just at 67.67 actually. I just sold a little bit, not much. But we have resistance right here at 67.75. Okay, and then support's going to be, I'm going to write down support at being 67 cents. So, and there's actually a reason for that. Let me double check something. 67.04 is the 50% retracement. That's why. coming out of this channel right here. So 67.75, 67 cents, 67 cents. Key support. Let's just make an assumption that we break above the 67.75, and I'm hoping we don't, just because I just shorted a little bit. But if we do, 67.92, 68 cents, spike high up here. So, you know, some further resistance at 68. Okay. We're still bearish as we came out of this pennant, but it's obviously it's frustratingly not, you know, moving down, but it is still bearish while it's outside of here. So let's go over to the Aussie. Aussie. Okay, now the Aussie is sitting. See this this dotted line, this really key dotted line. That was our kind of pivot area for the week. Here, let's remove that. I'll redraw that. Hold on in just a second. Okay. Now, the reason why that area was so big is because you can see that it was a breakout point here, breakout point here. That was support, held us at support earlier this week. We bounced. Now we've kind of broken down, but there, you know, there's this big 618 that looms just below. So 6180 is support, because if we can get below that, then things will get 7180. I'm sorry, 7180. Resistance. You can tell it's just kind of bouncing around here, struggling at this 7250 support. 7250 is resistance right now. Tight ranges, guys, very tight ranges, and this is bearish, but you know, we're sitting near some pretty key support here. Let's go look at the dollar index. Here's the dollar index. Now on the dollar index, you know that we're moving right into very key resistance. We had our flag pattern yesterday. We tweeted that yesterday morning, right at the highs, reversed at 95.50. Now key resistance is going to be, let's double check that really fast. Okay, so that excuse me, that resistance there, roughly 95.70, 95.70. So even if we hit new highs in the dollar, even if we hit new highs, you have to realize that there's really key resistance up here. So I'm going to write that up down, 95.70. Key resistance, that's why I put an asterisk there. Okay, so you got to be careful with that. We're still in a big range. Dollar Canadian slumping a little bit ahead of the news, guys. We're getting back towards 131. Remember, this data is coming out in 24 minutes. Okay, support 95. Tight ranges, guys. We're going to break out of these ranges today. We may not get any huge moves, but, you know. Let's go over to the Peso. Now, it was really crazy yesterday. I shorted the Peso. You know, I've been talking about it for months. I've been talking about it for months, saying, hey, I want to get short the Peso at 1850s. We got up there yesterday, and I decided, you know, we had this fib confluence. We had the 161% extension of this move, 618 of this move. They sit right on top of each other. I said, well, what the hell? I'll short a little bit. So I did. I shorted a little bit at, I think my cost average was 1851, and I closed it at like 1846 or 1847. I made, you know, 400 or 500 pips or whatever it was. Wasn't a huge gain in the peso, but I ended up making a little bit of money. But here's the thing about the peso. There's no way I'm going to stay short the peso right now, because I think the risk to the stock market is a move lower in the coming weeks. So if that's the case, we're going to break higher. But what's the big deal right now is this. Here, let me get it. Actually, I'll borrow that. I'll just take that over here. So I think what's possible here is a move down in the peso down to 18.25, which was support, and then a move back up. Okay. Now, obviously, 1860 is a big deal, because if we clear 1860, then you know the stock market is going a lot higher. Okay, or a lot lower. Excuse me. If we break 1860. That is key resistance. Now, support is going to be 1825. And as I told you the last week or so, I'm more in the camp now of shorting the US dollar Mexican peso closer to 19. I think we get back up towards 19, especially if the stock market weakens. All right. Okay. Norwegian Krona. Now, the US dollar Norwegian Krona, 825 is going to be key support. If crude oil is going to weaken from here, this dip is going to be very temporary. So keep that in mind. US dollar Norwegian Krona, key support is at 825. You want to be a buyer down there. You want to get long the dollar Norwegian Krona. That's the place to do it. All right. Now, it's from yesterday. I'll just take this and do this. Okay. Now, resistance is obviously the spike highs, which would be 839. For now, I still think we're going higher than that, but for now, that's going to be the resistance. And it's really all about crude. And also keep in mind with the US dollar Norwegian Krona, let's just take a bigger look here. So we had this head and shoulder pattern almost played out. It depends how you want to draw it, you know. I mean, you know, it depends on how you want to draw that neckline, where the neckline was, and you know, we basically completed a head and shoulder pattern. I mean, for all intents and purposes, that's completed. Now what we have is that we have the other inverted head and shoulder pattern, which is right here. There's a shoulder, there's a shoulder, there's a head. So that, where does that mean we're going? Well, that means we're going over time going back to 854. All right, so $854 is probably where we're going to go in the US dollar Norwegian Krona over time. Not necessarily right at this moment in time, but over time. So that means you want to buy dips and, you know, continue to target up towards this level. Now, that's just giving you a longer term view. All right, let's take a look at the US dollar Swedish Krona. Let's wrap things up here. So, regarding the Swedish Krona, yeah, such a massive reversal. I mean, this is just, as you guys know, just massive reversal off the weekly flag lows. I mean, that was just so great. We did a false breakdown below 803. You know, 2 weeks ago, gave us this huge hammer. I know I got a lot of fibs there, so let me remove everything. We can redraw it. But we had this false breakdown, perfect measured move, reversed. I mean, how insatiable the dollar appetite has been since we keyed on that reversal. Just insatiable appetite for the dollar. And what you'll see here, take a look at this. See this red line right here? See that? Okay. Support, support. Resistance, support. So I would think that any dip down towards 830 today, any dip down towards 830 is going to be bought if we can get down there. Okay. Resistance at 838. 830, support 8.38, resistance, not even great resistance, and it is bullish. Okay, your bias chart is complete. And you had me at hello. You complete me. Just so you all know. Okay. We're done.